What's up, YouTube? Welcome back. Today we're going to go over something very popular that I've seen across the board with new traders, beginning traders, and so we're going to make this one tweak. This one tweak first and foremost. It's no secret. Sometimes I come across condescending or talking down. And someone made a comment in that in my last video, and to be honest, I hate those comments because that's who I am as a person. I'm not a teacher. I'm only sharing because I do care, if that makes sense. We all know I'm not a teacher. I would not make a good teacher or president for that matter. But I am trying. I'll try to be more positive. This one, though, I'm going to be pointing out a very common mistake a lot of people make. So it is not to mock or make fun, but definitely hear me out. Because first and foremost, real quick, if you're on my channel and you notice the zones stop, there is a reason for that. So if you think there should be a zone any lower, then let me know. Other than that, give or take opinions about where that one's going. That is earnings this week, so we're just talking about that. Let's bring up another one, actually. Let's maybe let's talk about where's a good, just solid downtrend. Okay. This might work. So in theory, now I'll show you guys how I trade. Now all of this is obviously easier said than done. I have the ability of showing you the whole chart, right? So I was in Alibaba, but in all reality, yeah, for sure probably would have bought right in here. Let's zoom in real quick, because this is realistically how, I would have traded. This is what I hope you guys do, okay? Okay, we see it base out. Yeah, I would have had this zoned out right here. Stop would have been right below here. Now, all my stops, yeah, even giving it wiggle room, 241.45 would have been a real one. I look here before I look here on the price. All right, I look at the candles. Candles come first. What's that trade physical setup look like? Price. Now let's get into price risk management. Just real quick, if you want to get caught up on how this is a different channel, let's just refresh that. Did we get any subscribers? Couple. So go to this playlist really quick. How I trade. That will get you caught up on these videos, right? So my it explains risk management. When I talk about type 1, 2, or 3, explains all that. All those videos are 5 to 8 minutes. There's 3 of them. Okay, so this is how it looks. Entry, stop loss, whatever. Let's pretend I had a reason for that might have created that. But let's just pretend that's where my next zone was at, right? We're not trading something going into the abyss at all-time highs, but we have reason to believe there's the zone, there's my take profit. So here we have it, and as I get in, let's say this is my stop loss. Okay, here we go. That's red. So as each candle pushes up and makes these higher lows, I start trailing. Now we see this little bull pennant show up right here, so stop goes underneath that. Anytime I see a pattern forming like that, I do put my stop just under that, because right here, just look at this. Right here, call that a bull pennant, bull flag. That's a bull pennant on a smaller time frame. So any of those, my stop is going to be right below that base. It's either going to be in my favor or not. Now, when I take a trade, I'm right or I'm wrong, but I'm moving on. Like, that's it. By the time that trade is placed, it's set in stone. When that trade ends, set in stone. Even if I stop out and get back in, I'm not getting back in. I'm saying, here's this ticker. Yes, I did just literally tag out 5 seconds ago. Right now, the price still makes sense. A lot of times it's a wick. Like, tags me out, jumps back up. All right, it was a wick. Let's do this again. It still makes sense. It's still a brand new trade. There's no getting your money back. There's no getting back in. There is just the current money you have, the ticker at hand. So, anyway, that right there, we get push up. It gaps up. We throw off that little wick. Stop goes here. We're cruising. We're moving and grooving. Now, this wick realistically would have got me. This one right here. Unless it happened pre-market. Uh-oh. Where's it at? Ooh, morning volatility. That... Nah, if it didn't get me, it would have got me the next day. Okay, so realistically, I don't like... I let the banks, institutions, hey, get your coffee first. Then show me your cards. What's the direction for the day? Now we're rocking and rolling. So there's a 50-50 shot real time whether I got tagged out here or not. Because that might have just really got me. I mean, we're gapping up. I would have seen this wick right here. All right, cool. First 30 minutes, maybe we chopped around. This is an hourly, so we might have just dropped down. That would have got me. My stop would have been 285.45. Okay, so let's just, for purposes, let's hit it here. Entry, take profit. I'd have trailed it on its way up, management mode. And we got it. Now, something I say a lot, the trade's going to go from, the trade, right? It's going to go from 0 to 100, whatever that spectrum is. Grabbing that trade from 10 to 90 is absolutely amazing. Getting any of the meat on the bones from 20 to 80 is still a good trade. This, I left money on the table mindset or anything like that. Like, guys, if you want to, if you're just bored one day, pull up a screener, scanner, whichever you want to call it. Over 7,000 tickers. You are missing a ton of moves. Right? You're not going to capture all of it, so don't even worry. That's like a toxic relationship. Don't even worry about that. So that's how that trade would have panned out. Then, if I were to get back in, realistically, we started to base out here. So that tagged me out. I see this move, and then we get up here. Maybe I did get back in. My new stop would have been right here. We're rocking and rolling somewhere in this day. Got me out, if not back here. So that next trade might have been either a dud or a couple bucks. Ooh, as a matter of fact, hang on, let's put that back up. What do we get in down here? Here's our take profit. Now here's where that trade ended. Call it right there. Okay, so if I'm logging this, there's the magic. Stop hits, that's where it fills. Boom. That's what my trade looks like. Now remember, so what's very important is I hear this strategy a lot. I'm going to scale out. Okay? It's weird. It's not the most effective strategy. There's a reason why I don't do it. I know a lot of people that do it. I don't typically fight people on that. As long as you're making money, I actually won't fight you. I don't even care if you tell me you're making all your money off the RSI. I'll mock that thing all day long. But if you tell me it's working for you, I don't want to hinder any of your success. Just we'll talk later if it all of a sudden quits working. But, you know, like, the last thing I want to do is 1,000 shares here, 500 shares here, 200 shares here. Like, what am I selling my last 10 shares right here? Sweet. I've killed you just on this strategy of trailing it alone from 1,000 shares to 1,000 shares. You want to talk about leaving money on the table? That I will entertain that talk with if we're talking about that. Because, yeah, I obliterated your profits. Now, I don't say that to be cocky. I'm saying that because in this world, if you like, what's your win percentage? 50-50? That doesn't even matter. I could probably lose 4 out of 5 times and still make money because my winners, first of all, I let them run. It's important to let them run. And this is all going to segue into what you guys are probably doing. I'm not scared of making money. Some of you guys, it just seems like you're scared of making money. Because like, oh, it pushed up $1. I got to get out. I'm not saying it to mock you. That's your feelings. You guys are feeling, oh my gosh. Like, I've seen this at the casino so many times, people with gambling problems. Take your money and run. That's a sign of no confidence, okay? And just emotions. Now, you can't get rid of those. What you can do is recognize them so they're not trading for you. Like, okay, that's nonsense. I know that might be my knee-jerk reaction, but I'm not going to react on that. Now, let's switch gears. First of all, I'm buying stuff that goes up. I know that sounds simple, and I do say that mocking all the time, but I like to buy things that go up. It's not hard, right? Like, hey, it's going from the lower left to the upper right. That sounds like something I want to get in, okay? Typically on all time, we can take this to any time frame you want. We're green. We can go to the micros. There's our pullbacks. Those are our entries. So the most common mistake is, let's just get rid of this channel down. Most common mistake is you're bag holding. Okay? Bag holding is, the difference between bag holding and investing is one has a plan, right? So you were going to get in here. Let's just say for the most part you had a stop loss in place. You had. It was a mental one, but quit doing those. It's a hard stop. Get out. You're not paying commissions. There's no fees. Put your stop in place. Use that as your alert to check this thing out. When that stop hits, in that regard, hey, that stop hit, your alert goes off. You check your phone. So what if you stopped out here and it's right here? Who cares? Okay, we're not worried about pennies if we're trying to make dollars. Okay, so get back in. Don't be paralyzed to get back in. You're stopping out is just an alert, because what if you stopped out and you do check that, hey, I got an alert, I just stopped out, let me check this, and it's way down here. I don't want to get back in. Thanks to whoever bought my shares. That is your mess now, not mine. We're on to the next one. Okay, without that, if you're going to do this mental stop loss, sometimes, man, that right article hits, that tweet, something, that momentum changes and goes to the sell side, and your alert goes off because you're mentally going to open that up and click the sell button. Like, if you're going to automatically do that, why not just put the stop in place? You're lying to yourself. You're just giving yourself an out. Like, you know you're going to back hold, put the stop in place, because you're going to do that, open that phone. By the time you do, it's way down. You're going to say, well, I can't sell. No, I'm not selling at the bottom. It's only going to get worse. Okay? So, this is what a lot of your trades look like. Oh, there's your previous high. You're on the, let's say you're on TOS. Now, I make fun of TOS a lot because it's like the 20-day 1 hour. Like, sweet. Now we have 20 days, and that's it. Like, you know what I like to do? I like to be able to scroll out and see. I want to gauge everything on different time frames. Not like, hey, the 5-day, 5-minute, let's go to 20 days. Cool, let's see 4 weeks. Thanks. It just leaves out a lot of information. Let's say you're on TOS. And you see that as previous highs. And you're thinking, look at the margin it created. We've all heard the excuses. Okay? That is your trade setup right there. What do you want to do? You want to enter here? We'll call it you entered there. Okay? For the most part, some of you guys didn't manage that in between. You didn't put your stop in the green. It did make a lower high. But it didn't get to your price target. And all of a sudden, you're still in it. But we know how this pans out. Never hit your price target. So you're going to wait because you're right. The person you're following, he's right. Okay? Some of you guys are in this. I mean, you are. We're going to just engulf it. There we go. Now that's what your trade looks like. Maybe it's exaggerated. Some of you guys are actually in Alibaba. Okay? Now, it's glaring right now what you should have done. Hindsight, sure. But you got in here. Let's say it started to push up. You guys are so quick to scale out. You're just so scared. Someone told you can't go broke locking in profits. Okay, now why I call that the silliest thing I've ever heard is because you guys are out here locking in $3 and bag holding something down $200. Okay, the whole you can't go broke locking in profits, forget that out of your, forget you ever heard that. Okay, that's silly. There is some truth to it, but that's something a profitable trader will joke about to another profitable trader, not to you guys, not to you as a brand new trader. You guys just don't know. Look how effective your strategy is, though. Let's say it's not the first one. Let's pretend we're on a different ticker. Look where you're at. Okay, like take profit. Some of you guys have just outlandish take profits, so they're just ridiculous. There is only one. Sorry, I went to. I was going to say tiny difference. There's one difference between my trade and yours, and it's not the fact that I went long, because over here I would have gone short, because the trend is just my friend. I would have. So that's not the obvious. That's just me pointing out a chart of we're going to play the what if game like we actually knew. So realistically, I would have gone short. I've short Baba a bunch of times on here. Baba's been the laughing stock of anybody going long. Okay. Your whole mindset is backwards on one factor. You will close your winners fast and let your losers run, where I let my winners run and close my losers fast. Okay, I'm a professional at stopping out. I'm stopping out right now. Get me out of that thing. I'll make the decision if we want to get back in. You come talk to me first, but my money is in my account, not anyone else's right now. Where everyone else, it starts to go green, they start scaling out. That diminishes your profits a lot. Now that's one end of the candle. Now you're burning it on the other end because you're bag holding something. You decided, I'm going to wait till it's green to sell. I'm going to wait. I'm just going to wait. I'm going to wait. And it did just get worse. What if tech continues right now? What if it's not just BABA? What if things just get worse? Like what? So I'm personally in Facebook right now. Now this is in my investment account. So as far as my plan goes, it is to hold it. So I'm not going against my plan. Let's say you wanted to buy the dip. Let's say you bought the dip at this zone, the speed bump zone. Why are you still in it? Why are you not out of this thing yet? What is showing you? Like, it's trending down and you're thinking oversold. Anything trending up, you're thinking is overbought. So you're backwards on things. Your whole strategy is just backwards. Flip it. Either click the sell button instead of buy, which is a joke. I don't actually do that. Start cutting your losers fast and letting your winners run. Okay, I mean, that is the only thing you need to change. If your chart, now the video I made yesterday was over the weekend, take the past month, chart out your trades on TradingView. Come to TradingView, tradingview.com, click right over this little arrow, long position or short position. Now, don't just toss it out here. All of these have a thing. Here's your entry, stop loss, take profit. Put this dot where you started the trade. Put this dot where you ended the trade. Don't take a block inside here and tell me that's where you took the trade, but then this whole thing looks like this. Like, match it up. Start moving these lines where they need to be. Now, if you watch that video, you know that is your homework for the weekend, and post it in my chat. Because I'll say it again, if you do that for all of your trades, give a time period, the last 6 months, you're going to notice a pattern. You're going to notice a lot of them look like, maybe not, they don't exactly look like this. You're going to notice, like I mentioned in a deck of cards, there's going to be 4 suits. There's going to be 4 typical things you do. Most of them can be chalked up to the same. Like, you bought at the highs, you sold at the lows, like, and you'll be able to point out your emotions at the time. But most of you guys are so comfortable with red that it doesn't surprise you when your charts are red. When your P&L is red, you're going to hold until it becomes green. And up until this year, that strategy has actually panned out. The market rewarded bad behavior. Doesn't mean it was good behavior. It just means you actually made money learning a lesson. The downside is you didn't learn that lesson. So right now you're paying for that lesson because things are red and it looks like they're getting worse. So the whole takeaway from this, if you are doing this, if you're bag holding things and they're red, or you scale out, switch that one thing, start scaling out of losers. Hey, this is my turnaround, but I'm not riding 2,000 shares down. I'm going to cut that in half at least. No way I'm taking that full bag to the ground. No, I'm going to scale out some more. This is just past my points, time to get out. Even if you had to slowly adapt to that, eventually, as a trader, you will either A, blow your account, or B, you will somehow still have, you'll keep funding your account, or you just haven't blown it yet, and you just get tired of losers. Now, you will throw your hands up and just give up, or you will start stuff. Like, I don't even care. I'm just going to stop out. I'm going to stop out. Maybe Don's onto something. I'm going to stop out. I'll get back in. Let me just try that for a change. What you're going to do is you're going to stop out on something like this, and you're going to think, holy crap, that's amazing. Because right now, what you're going to do in your head when you stop out right here is you're going to count all of these green candles. That might as well be a green trade for you. Holy cow, I'd have still been in that. I'd have been down this much more. Thank God I stopped out. So, I'll wrap it up here. Chart your trades out. If you're doing that, switch that one thing. Start cutting your losers faster and let your winners go. And if you do scale out, consider not scaling out. There's one time I scale out because I trail things. I trail things physically by the candle. All I do is move my stop loss up. That's it. On TradeStation, the physical action is click my thumb, move the line up, let go, click OK. I'm not typing out anything. I'm not adjusting anything. I'm not doing, just click, drag, let go. Boom. That's how easy that is. If your broker isn't that easy, your broker doesn't care about you, doesn't know you exist, I promise. You have no ties. Switch. They don't even have an affiliate link for TradeStation. That's just who I use. Switch. Make the jump. Well, don't even worry about it. Yesterday's news. Yeah, sorry. I'm trying to think where I was going. The only time I scale out is when I trail like that, and it's just a trending day. Nothing but green candles. The nice, slow dance right up to the north side. We ring that bell and I never tagged out. Now, maybe we are a little bit overbought. Maybe we are a little bit up there. Maybe we do gap down. Maybe we're just in profit-taking area. We come up pretty close to a zone. At that point, I'll cut the trade in half, just because I don't want the overnight exposure, and it was already an awesome trade. So that's the only scenario where I'm like, you know what, I'm gonna cut this out because overnight. Let me just lessen this up a little bit. I'm still in the green trade, and if it's just still pushing up the next day, I'm right back in. My overnight exposure gets scaled out, and if it does start to take profit, then obviously I'm out. But I'll pile that thing right back in if it's still going. I have no problem. You guys have heard me say it all time and time again. Maybe we need to have more serious talk about it, but striking when the iron's hot is very important. Risk management, obviously the most. You want to take small losses. You want to take a lowercase L, not a capital L. But on the very other end of that is you got to let your winners run. And why not? Look how comfortable you were with holding that thing all the way down. Start getting comfortable with holding it all the way up. What if you were short? What if you just did click the sell button instead of the buy button? Then all you're doing is managing. If you took that exact trade, let's say you went short. Okay, here's your what could have been. Here's me going short. And I don't say that as like a cocky way. But let's just say someone with more experience. Here's someone with more experience going short. It jumped up. It tagged that zone. That's a type 1 short for me. My stop would have been right there, as a matter of fact. What's that at? 255.85 would have been my real-time stop. Okay, so congratulations, you're in a green trade. That pullback probably scared you, so right here you're cutting it in half. I'm going to scale out here. 1,000 shares. Cut back down to 500 shares. Another green day. I've seen a lot of people after that pump up. You gotta think, let's just invert this a little bit. They are excited to see that kind of move up going against you. Pow! Here, we'll invert that for you guys. If you also, that was Alt I. Just invert the chart. If that's what it takes for you to just get around this mental curve of shorting something, okay. But now I gotta figure out where we're at. Short. It was this spike right here. So 1,000 shares short. That scares you. So right here you're at 500. That thing goes screaming up. You're out. You are, or maybe you got what 400 shares locked in. You got 100 shares you're just riding. Then you just see it going sideways. And then you're out. Or you see it go sideways and break this way. So then you finally cut it. Your whole trade goes from here here's your whole trade. You had such a good trade on there. There you take profit was this next zone. But that's where your trade ended. Because you scaled out. Maybe you got back in. But maybe, since it's going in your direction, you kick your feet up on the desk and you let it do its thing. I'd let the star players have the whole field. Hey, do your thing. Get up there. These days like this, in reality, if I'm short this, so let's get back to it. These days right here, I probably did tag out. On that base, I probably did get back in. But just think of how much easier it would have been to kick your feet up and just let it go with the direction. How many times, especially if you're in Baba, did you think oversold, it's got to turn around, it's the Amazon of China? You told yourself all the excuses in the world. You were so comfortable with red, you'll bag hold to the moon, but the second it's green, you're scaling out. You only need to switch that. Start bag holding your winners and getting out of your losers. That is the one tweak you need to make to, for most of you, probably be profitable. That's it. Switch that one thing around. So I don't need to repeat myself anymore. I know I've said that a bunch in this video. Just to drive it in, make that tweak. Change it. Start holding your winners and let go of your losers. Let go of your losers like just that. I don't even have a bad reference for you. Cut them. Get them out of here. They don't care. They don't matter. If you think it's not a loss till you lock it in, that is nonsense. It is a loss. You just haven't locked it in yet. It is a loss. Your money is tied to 3 or 4 letters. Whether you are in or out, like that does not matter. I promise you that does not matter. Because if you need to liquidate right now, that's how much you have. You're not calling up that company to say, hey, I was going to hold till it's green, but can you go ahead and just sell me those shares at my original price? Like, that doesn't, imaginable. Doesn't happen. Anyway, I'll end it here. Let me know. Can you make that change? That's my only question. Are you doing that now, and can you make that change? I will see you guys in my next video.